Welcome to The Long and the Short, a show where you can expect an honest take on trading, something you won't hear elsewhere. I'm your host Sandeep Rao. Back in episode 6, we covered the what and the why of backtesting, its history and the core concepts. If you haven't watched it yet, you will find the link in the description. Now is the time for the how part of it. This has been a highly requested topic and today I'm covering it. In this video, I'll walk you through step by step the precise methods and tools we use to run the backtests you see in many of our episodes. You will learn how to run them exactly like we do. With that, let's get started. As always, I want to set the stage by introducing the two essential tools that make our backtesting process possible. First, you need TradingView. This is an independent third-party platform for charting and more importantly for backtesting. I should mention the TradingView charts you see on Zerodha Kite are just charts. To run the backtest that I discuss, you need direct access to the TradingView platform itself. You can use the free tier, but at the moment I'm using a paid plan which simply gives me access to more longer history of data for a more thorough backtesting. We'll use Claude for two key reasons. One, to write the backtesting script, which will be written in the Pine script language. And two, we would need Claude to analyze the trade logs which would come after the backtest. Again, you can use the free plan for Claude AI, but at the moment I'm using a paid one. Now here's a disclaimer. This is not a paid promotion for either TradingView or for Claude AI. These are simply the tools that I use to run the backtests you see on this show. So with the disclaimers out of our way, now let's get started with the key steps. Now backtesting involves 5 key steps. First is hypothesis selection or creation, which means defining the specific strategy or idea you want to test. Example, you may want to test a trend following strategy on Nifty. That could be one hypothesis. You can make it more specific by saying long only trend following strategy on Nifty. That's also possible, which means you take only long signals and ignore the short signals. Second, choosing the method or the indicator to use. To create a trend following strategy or to generate trend following signals, you need a method. Two methods we've spoken about in the past are moving averages and using a breakout indicator like Supertrend. The third step is to code the strategy in Pine script, a step where we will use Claude AI to write the strategy code. You see, this is such a boon, right? I mean, earlier you had to write the code yourself, but now you don't need to. Claude does an amazing job at it. Fourth, run the strategy in the TradingView across multiple time frames to observe its initial performance and results. This is a very simple step. And finally, the fifth and the most important step is to download and analyze the trade logs using Claude AI again to perform a deep analysis of the detailed trade history for further refinement. The focus of this video would be on steps 3 to 5, which includes the end-to-end demonstration of writing the Pine script code using Claude AI, running the backtest, and doing the analysis of the trade logs generated by the TradingView platform. So with that, let's jump straight in. So the first thing that you have to do is log into TradingView and open the symbol that you want to test the strategy on. In this example, I will take Nifty spot and Gold M for futures, and I want to show you something specific on Gold M, which I'll get to in a while. For now, let's start with Nifty. So Nifty is spot data and you have daily, hourly, all of that. Okay, so I'll move this to the side. So now we have Nifty data with us. As you can see, there are no indicators applied. There's nothing which is showing up here. But what we need to do now is, now that we know this part is working fine, we will now move to the first step, which is writing the strategy script in Claude AI. So that's what we would get to. So here we are. So I have logged into Claude right now, as you can see. So what you would ask Claude to do is write me a strategy indicator in Pine script using Supertrend. So that's all. So there's an error here which I fix and then click. So Sonnet 4.5 is doing the job for us. So let's see what happens. So the code is getting written as we speak. Okay, so you have all of this. So Claude by itself has, used some defaults here, as you can see, and then some other options which exist. Now I'll copy this code from the top here, copied, and I go back to TradingView. So in TradingView, I'll open this Pine editor, and in Pine editor, I will go specifically and create a new strategy here. Okay, so this is a new strategy. So there's some code here which I'll delete and then paste this new code. So that's what I have done. And then I will click on this. So you get this super trend strategy. Okay, so that's what you would get, and you will have to click on save. Once you save and apply the strategy code, you would see the long and short markers on the chart the way you're seeing it right now here. Now this is fine, but what's important to check is, once go to the strategy here, you have the strategy here, you go to settings, and in the settings check the inputs. We are at defaults here, which is fine. We'll come back to this later. But in properties, we have to set a few things. So you can move it to INR, the currency. Default order size, you will have to keep it at 75 as a default order. You can keep it at 10, 75, anything, but we are keeping it at 75 because, we want all the calculations to happen at 75. And then that's the quantity that you would set. You could do that. And then, go down, and you would have to click on bar close, which means the trade would get registered only if or on bar close. So that's what it is. So that's what we have done. And then we come to the strategy report. Let's look at it in percentage terms. So green line is in equity, is the equity curve, and the blue line is buy and hold, which means if you had bought the instrument and held on till date, you would have made 114%. And if you had traded the strategy, you would have made 118% approximately. So that's what this chart tells us. There's an equity curve. The drawdown that we are talking about is shown through this bar over here. As you can see, there is an 18% drawdown here in the strategy, and then there's another 18% drawdown here, and so on. So that's what you see over here. But generally, visually, if you see, the strategy has done pretty well compared to buy and hold, especially when it comes to the drawdowns. So that way it is pretty good. The drawdowns are not steep, as you can see over here in this curve. So that's one. And so that's what you see over here. And then if you want to see the performance, so you get to see the performance here. Open PNL is the trade which is running right now. That's not really relevant for us. And what's important to see is long and short. So long has made around 111%, and the short has contributed just about 7% from this particular strategy. So you could actually let go of short, and maybe you would still be doing pretty well with the strategy here. And you have all these parameters. If you want to track them at any point of time, you have all this. But what I typically do is I have my own set of metrics which I calculate from the trade logs, which I'll show you later. But yes, if you want to use this to kind of eyeball how the strategy is done, you could do that too. And then comes trade analysis, the number of trades, open trades, winning trades, losing trades, percentage profitable, which is win rate, I think so, average PNL, all of that, that's also here. So other than that, then we have all the ratios, Sharpe ratios, Sortino ratio, profit factor, margin calls, all of that. And then the most important stuff, which is the list of trades. So this is what we want, and this is what we would want to export out of TradingView and then take it to Claude, and that's what we would do. So over here you would see there is a download option. So once we download the trade logs from here, we go back to Claude, and what we would do is we would upload the file. So that's what you see over here, and we're going to upload the file, and we would ask, can you please parse the data? This is the first step to check if the data has been captured. Along with parsing, we would show me the most recent trades, 5 of the most recent trades from the log. Okay, so this is one way of checking if the data is accurate. And we could go back to the chart and compare and check if the entries and exits are matching with what we see in the log. Because if this is wrong, then all further analysis is obviously going to go waste. So as you can see, the current open trade, which started on November 17th, is still active, and the entry happened at 26,010.5. So that is where the entry happened. Let's go back and check where the last trade entry happened, and this is the long trade, and it says that the entry happened at 26,010. So this is where the entry happened, 26,010, and that's the close price, as you can see, for this particular candle, and that's where the entry happened. It's long. Okay, so let's do another check as to if any previous trade worked similarly. So we'll go to the previous trade, which was a short trade here, because this is a type of an SAR strategy. So you have exit will match the entry. So the exit of the previous trade is the same as the entry of the current trade, and the entry for this short was at 25,780. Let's go back and check if the entry was at 25,780. So looks correct, because the entry happened at close at 25,780, which is visible on the close. So looks correct to me. So this is the first level of check that we would do, a sort of sanity check, whether the data is correctly captured or not in the trade log. So now we're good with that. Now let's start with some basic metrics. We'll start with the equity curve. So can you draw an cumulative curve in terms of points based on this trade log? Also draw a drawdown chart along with it. Let's see what Claude does. Now, while I didn't ask for it, but Claude gave me some key performance metrics. It said there are 331 trades all over 5.9 years, cumulative return of 118%, final equity, blah, 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 number of points, and maximum equity peak, all that. So as you can see, it has also drawn a equity curve and a drawdown chart. Now, earlier we did not see this drawdown chart on TradingView, but Claude has done the job for us. So we are able to see the drawdown in terms of points over here. So which is amazing according to me. So let's move further. What else do we want to know? So typically the way it works for me is I have a set of metrics that I always want Claude to calculate for me, the set of metrics which you typically see in all the episodes. So what I would do is I'll give a dump of all those metrics and ask Claude to calculate those metrics for me. So that's what I'm going to do right now. And I'll be a bit lazy and give a dump of all the metrics to ChatGPT, and you will see how I give it. And at this point, I'll just paste this. So can you read this list of 19 metrics and calculate it for me? So what Claude would do is it'll kind of figure out what those 19 metrics are, and then it'll calculate all of that based on the backtest data. So with that, we have this performance metrics now with us. So it has the period, it has total PNL, it gives us the win rate, total trades, everything that you wanted to know, the average win, average loss, return to max drawdown, all the metrics that I had asked for. I'll show you something else. So can you make a year and month-wise table in points with the total column for each year? As you can see, we have year and month-wise PNL in points. So we have all the months here and we have each of the years. So as you can see, this is 2020, 21, all that. Each year, how many points the strategy made for long and short. 21 was a bad year, 22 was a great year, and 23, 24, 25 was more or less the same. So that's something which you can see over here. So essentially, by using Claude to analyze your data, you can pretty much ask anything that you want to analyze the trade log. So any question that comes to your mind. So when was the longest streak of profitable trades and how many trades were those? You see, we got the answer. The longest winning streak was 7 consecutive profitable trades, which ran from 13th of March till 28th of May in 2024. So that's the answer. So in essence, any metric or any question about the data that you have, you could always ask and you could get the answer for it. That's the beauty of analyzing the trade log using Claude. So that's one. Now I want to switch to something else. And what we have done so far is I've shown you how a backtest could be run on Nifty, which is spot essentially. So now instead of spot, I will show you how a backtest could be run on, let's say, gold futures, which is a futures product. Now I'll move to gold and show you how gold M, which is a futures product, you could test that too. So one thing, I have taken gold M, which is a continuous futures product, and at this point, I want to tell you what exactly is continuous futures. So what is continuous futures? Continuous futures data is a single long price series created by stitching together multiple futures contracts. Now you see, at any given point of time, there are 3 active futures contracts: current month, next month, and the month after, each with its own unique price. For example, we are in November right now, so we have a November, December, and January contracts parallelly running. But for charting and backtesting, we would want one smooth, uninterrupted price series such that if we pick any past data, it should pick the price for what was then the current month. But there is a problem. When one month ends and the new contract begins, there is a difference in the price of the 2 series called a spread. And that causes a gap in the data. To deal with that problem, platforms do what is known as back adjusting. Let me explain how it works with an example. Suppose on the rollover day, Nifty November futures is at 25,800 and Nifty December futures is at 25,950. If we simply switch from November to December, the chart will jump by 150 points, even though this 150 move is not a real market move, but just a contract change. To solve this, TradingView follows a proportional back adjustment process, that is, divides the next month futures price by the current month futures price and multiplies that factor to all the previous months. Using our current example, it means 25,950 divided by 25,800, and that will be 1.005814, and all the previous month's prices will be multiplied by this factor. Now back to TradingView. Since I spoke about back adjusted data, it's important that you look at this particular button over here and click on it to adjust the data, or what we call as back adjust the data. So once you do this, you'll have to do this step before you run the strategy. So we clicked on it. It is grayed out right now, not grayed out, but it's highlighted. So what that means is the data is now back adjusted. We go back to strategy tester and to the overall portfolio, and here you can play around with the settings. I had it at 7, so if 10 does better, yes, the 10 does better than 2. So you can kind of play around with the settings and see which one gives you a better return. I have selected long only over here. You could do short only and see what happens. Short does not do well. You do both if you want to, and if you do both, then the returns are obviously better. So either ways, you can play around with this and figure out which one gives you a better return. So that's what is this. And just the way in properties, you would have to make sure that the default size is 1 and the quantity is 1 and it's on bar close. So that's what you would do for gold. The same logic applies like we did for Nifty. You would download the trade logs from here, and once the trade logs are downloaded, you could go back to Claude and analyze it. I showed you gold so that I could help you with the back adjusted feature which exists in TradingView for certain futures. So that's something which you could use for gold in India. While I have shared how to use TradingView for backtesting, it's also important to know the limitations of it. First, in an Indian context, we don't have historical options data, so that's out. Second, you cannot do portfolio level testing. At one point, you can test a strategy only on one symbol. So you cannot parallelly run a strategy on multiple symbols or do any kind of a strategy where you have to switch symbols. Third, statistics wise, if we look at it, there are no features for segregating the data as in sample and out sample, or even stuff like walk forward analysis, etc. Though this can be taken care of by selecting different time periods while backtesting and downloading the data separately as two different data sets and letting Claude do the job. That said, it's still a good starting point to do basic backtests and use tools like Claude to do further analysis. Our base reference here is being a blind monkey throwing darts versus being a monkey that does a backtest and then throws darts. The idea is to be more like the second monkey. But remember, just backtesting by itself does not guarantee success. For all you know, the blind monkey may still win. And with that, I'll wrap up today's episode. I hope this gives you a clear idea of how we run backtests for our episodes, and I also hope it encourages you to try different backtests. Do share your questions, thoughts, and feedback in the comments. I'll do my best to respond. Thank you for watching and see you in the next one.